good afternoon. It's Friday, June 23rd, 2023. I'm John Schenk of Deerwood Realty. I have to hit buttons. I have to hit a lot of buttons at once, and sometimes I don't do well. Let me put a little hello in the chat. That encourages people to chat with me. I say that, but no one chats with me. Got a good show for you today. I'm sorry I've been kind of out. I don't know. I don't know how to say it. Like, I'm not doing very good on like being consistent. I will say that. As far as like I'm in the day, I'm doing everything I can. I don't know how to put it. I'm doing the things I have to do. I'm putting out fires, but I'm not advancing, and I'm not proud of that. But you know what? I'm just gonna keep keeping on. Got a good show for you tonight. We're going to talk about the real estate game. That's kind of what I'm good about. I mean, that's kind of my job. We're going to talk about specifically like what could be wrong with the housing market. Like, what's going on? Like, it doesn't seem right. It hasn't seemed right for a long time. We'll get into that. We'll talk about. I had some estimates today for body work that's driving me crazy, and I want to get it off my chest. And that's pretty much it. I don't know if we'll go the whole time tonight. I don't know what's going on. You may say, well, John, it's not the whole time. It's literally like the afternoon. And I understand that. And all I'm going to say is it's Friday. I don't have everything I need to get done, but I wanted to get a stream into you. I wanted you to know I'm alive. We have lots of stuff going on, but I don't know how to put it together. A lot of that lately. But anyway, let's get started. Number one, how much do you think it would cost if you had to go to a body shop, okay? How much do you think it would cost to get one rock chip in your on the front of your car fixed, as well as one rock chip on the back? Now, understand, I don't know anything about body work. I mean, I watch shows and stuff. There's something in my heart and my head that is telling me that I should not be doing this particular task. I remember my grandfather did put touch-up paint on his car, and it looked really bad. And I don't think that's what I should do. Plus, one of the spaces is like a little rusted, and I'm worried that if I don't fix it now, it's going to get worse, and I don't want that. So anyway, I called three places. I called one place. This was earlier in the week because it's my wife's car. And I said, hey, by the way, my wife's got a car now. Got a new car. Last week, congratulations to us. It's a new to us car. It's not a new car. We don't buy new cars. But used cars are still very expensive. I can tell you that. But it was time. But anyway, I called, they go on the web and do a search, right? So I go on the web and I see two places. I actually walk by both of these places every morning when I go for a walk. Now, I don't go for a walk every morning lately. That's part of this whole, like, hey, things aren't, like, you're not doing things consistently. Well, the reason why I'm not walking is because my foot has a blister on it, and it keeps getting blisters. And so I don't know what to do about that. Anyway. So I called the guy. He's like, yeah, bring it in on Friday at 9:00 and we'll go over it. And I said, okay, cool. And then I called another place and they're like, yeah, just come in whenever. We don't care. So I go to the place. I'm all excited. I go to the place this morning. I show the guy, he's right there. I show the guy the chip. I mean, it's a good sized chip in the front of the car. And I show him the chip in the back. And there's one other thing that is like scratches. And he's like, well, we'll have to take the hood off. So that'll be $2,000. And then we're going to have to take the back hatch off as well. That'll be another $2,000. So you're looking at $4,000 to fix the car. Now, the car's not, I mean, it's new to us and we like the car and everything, but this is not what we need. We don't need a $4,000 repair. I thought that was ridiculous. And let me tell you something. I think this is one of those places where somebody doesn't want to be mean to you and say, we're not going to give you an estimate. We're just going to give you an estimate that's so stupid that you're not gonna come in. So I said, okay, well, that's fine. Thank you. And based on that, I went home. Actually, I went over to Chick-fil-A and got myself a breakfast biscuit because I was sad. I don't want to spend $4,000 on the car. I told my wife, she said, that's nuts. Don't do that. I said, I don't have $4,000 to do that, so we don't have to worry about it. So then the people that I had called earlier, I was like, I'm not going to the estimate. I'm just not. I'm sick. This is really bad. So I looked online. I found this other place, and it was about a half hour away. Called them and said, hey, can I come in? They said, yes. So I went in, talked to the guy. He's like, yeah, we are going to have to take the hood. We'll have to take the hood off, but it's $800. And I didn't tell him about the other estimate. And they said, yeah, we're going to have to take the back off to fix that, the hatch. I think it'll cost anywhere between $1,800 and $2,400. But I'll get you a solid estimate when I get home. I got to go somewhere, but when I get back, I'll get you that solid estimate. And so, I don't know. What do you think? $2,200 to fix a crack? It seems like a lot. You might be like, John, well, what did you think it was going to cost? Honestly, I didn't think they were going to have to remove the hood to fix the chip in the front. And on the back, I didn't think they would want to take off the door. I thought they'd want to just paint it where it was. But the first guy said, well, I'm not going to fill up my paint booth with this vehicle when you just have to do two things. I'm like, well, I mean, whatever. So I don't know. I'm going to ask you, what would you do? Would you go online and try and find like some sort of repair kit? The problem is the one problem is it's pretty bad. Like I'm worried it's going to get worse, and it has to be fixed anyway. I don't know. Might do the first. Might do the one in the front myself. That's a terrible idea. Terrible. Okay. Anyway, let's go from that to the second thing that I was going to forget. That's the title of this video, Monetized on Rumble. Just so you know, I've been live streaming now for 2 years. 2 years in July. I have over 1,000 videos on my channel on YouTube. I'm at the top. Almost at the top of my subscribers count right now. I had 172. Now I'm down to 171. So I mean, we're not killing it. I mean, we're not making all this money on YouTube by any stretch of the imagination, and that's okay. But I certainly thought 2 years ago that I was going to be ahead. I would have at least been monetized on YouTube. I mean, they've lowered the requirements for YouTube for subscribers now. They've lowered it to 500, but my views or my hours watched is just terrible. I feel like it's terrible because I never get out there. Like I only get like a few views, and so that's not enough. And my show's kind of strange in that I talk about real estate, but I like to talk about other things too. I like people to get a chance to get to know who I am, what I'm about. That way, if you want to buy a house, you know, like, hey, I like that guy or I don't. I'd rather you find out that before you called me, because I don't have a lot of time. You can tell I'm doing 14 things at once. I can't even stay consistent with that. So anyway, long ago, I had a locals account. I still have a locals account. I don't go to it. And it's not because I'm trying to be mean or anything. It's just like nobody's paying any money for me because they don't know that I exist. And so I have this local, and it's like, well, you won't be censored. And I do believe that on YouTube I'm being held down. I have no doubt. But there's this thing that I was reading from a pretty smart fellow. He said, like, Rumble is freedom of speech and freedom from reach. That is, you may be over there and you may be speaking your mind, but there's no one there to go along with you. Now, I think that's changing. I think it's going to change over time. But there's still no way on Rumble for them to serve you a video that you would want to see, that you might want to see. Now, on YouTube, the crime YouTube is that they send you videos that you'd never want to watch, but it's part of a particular ideology, and so they want you to kind of, and I don't mean there's a concerted effort. I'm just saying the way the algorithm seems to work is it seems to throw in stuff that you don't want to see from time to time, but it does, let's say it does 80%. And so, yeah, I mean, I can't even find an audience on YouTube. And yet on Rumble, now you may say, John, how much did you make? I made a nickel. 1,000 videos on YouTube. I don't know how many on Rumble, but it's part of the stream. I made a nickel. Now, to me, that's success. I know that sounds crazy, but who would have thought that someone would ever pay me a nickel to do a live stream? I don't know what you think of that, and that's okay. I'm just happy about it. It's going to keep me going. If you wanted me to stop because I wasn't doing well, it's not going to happen now. I'm actually thrilled. I'm actually energized by the monetization on Rumble. Now, I hope Rumble does well. I hope YouTube does well. I think I have good content. Maybe I'm in denial, but I mean, if you want to know about real estate, at least in St. Louis, there's not a whole lot of places you could go on YouTube that would give you what I give you, which is data. I can't give you the pretty face. I guess we better get into the meat of the show. The housing market to me is not. Look, I'm not here to be like the housing market is going to collapse and you should be careful, or hey, the housing market's great and wonderful. What I want you to do is I want you to get a window into where I am, and I feel like if you can see what I see, then you can make your own opinion. You can make your own judgment on how the market is going based on what I'm seeing and then what experts tell me I'm seeing. I feel like I'm an expert, but whatevs. Okay, so the first thing I want to do is I want to give you an example. Okay? And I got to get my other piece of paper for this. And I want to turn that off because I don't want, okay. So I submit to you that the housing market has been broken, and it was never really repaired after the housing crisis in 2008. And I know you say, well, that's not possible. I mean, house prices are higher than they were in 2008. Therefore, it's fixed the problem. My response to that is, look, inflation is eating us alive, and you have no idea how bad it is. Let me give you the example that I think perfectly summarizes what has gone on in the housing market during my career and why I'm so uncomfortable. Okay. So South City, let's just say a good zip code in South City, 63109. House, I'm going to just give you a house history, okay? It's a 4-bedroom, 2-bath, 2 full bath, 1,600 square feet, okay? The last time it was listed, it magically became 1,900 square feet because in the city, they've been playing around with square footage so bad lately. Actually, for the last couple of years. Actually, the square footage thing is such a joke in St. Louis. We used to have a standard that we went by. And then now we're not using that standard. We're saying that if you get it appraised and it has a different number, you can use that number. And so it's always a higher number. This house magically grew 300 square feet and they didn't do anything to it. Okay. But in 2006, all right, 2006 was right before the housing started to collapse. I think I bought my house in 2007, and I'm still here, so I don't really care. But anyway, 2006, the house sold for $225,000. 4 bedrooms, 2 baths, 1,600 square foot in 63109. In 2009, it went up for sale, which was right in the mess. I mean, it was starting to get prices had started to come down. By then, sold for $195,000. So the person that sold the house and the person that bought the house in 2006, let's just say they lost 30. My math is right. I'm not good on my feet. So the person that bought it in 2009 stayed in that house until 2019, so 10 years. They sold it for $229,000. Well, actually 230,000 because 229,900. Okay. Now, what did they do to the house that the people didn't do in 2006? Nothing. What did they do that the people didn't do in 2009? Nothing. They didn't do anything. That's literally the same house. Has not changed. So in 2019, they were rewarded by getting, a good amount of money, $30,000, pretty much off of doing nothing. 2019. But they'd held the house for 10 years, and I think that ownership history matters. And so, if I were representing the people on the buyer side in 2019, I'd have been like, that's okay. A decent price. I can see that. Well, the house went up for sale again in 2021. What do you think the house sold for in 2021? And this is the illustration of the problems in the housing market. In 2021, we were during this certain phase in our history, which I hope we never repeat. House sold for $271,000. So let's just say $40,000 over what it sold for just 2 years before. And what did they do to the house to justify the $40,000? Nothing. Nothing. So you think, well, that person in 2021, they paid a lot for their house, but as long as they stay in it, they'll be fine. They'll be fine, right? Well, they just put it on the market. And you know what they put it on the market for? Now, remember, we're not in 2% interest rates right now. The interest rate right now is 6.92% on a 30-year fix as of today, right now. Okay? $271,000 in 2021. They're asking $325,000 for this house. $50,000 more than just 2 years ago. Can you believe that? This is, to me, what's wrong with the housing market. You're getting an inflation in prices, okay? But you're getting a devaluation in the dollar at the same time. Your purchasing power is nothing. And why is this? Well, wars. Got to fight wars. We had to pay all that stimulus. And so people are just getting, it's just a disaster. And you say, well, John, this is going to continue. It's so broken. At this point, it's so broken. I just don't see, when it does break, does anybody care? How can the house go up $50,000 in less than a year, a year and a half, and the person does nothing to it? And there's buyers that are like beating down their door to buy the house. Does that not seem screwed up to you? So I don't know what's going to happen. Okay, I don't know. I don't know if the person that buys the house for $325 is going to turn around again in 2 years for $375, because that's how crazy the market is in St. Louis. Now, we're going to go over plenty of tweets and stuff that says the market's terrible, and that's really the issue here. It's people are commenting on what's going on in the market. In the market, real estate is hyper local. Okay, I can tell you what's going on in St. Louis, but we're still getting bidding wars. We're still getting people over, way over asking. It's absolute insanity. And you say, well, John, you're contributing to it because you're telling your buyers that they need to come in with a strong offer. I do. I tell people they need to make a strong offer if they want to get a particular house. I also help them look for houses that I don't think are going to go way over asking. Those are houses usually, it's the inventory. If you see a house where it's a little old lady that's lived there for 30 years and they haven't fixed anything, many of the younger buyers aren't going to take on that challenge. Okay. House is still probably overpriced, but at least I'm not in a bidding war. And as far as for sales, as a real estate agent, my job is to get the most I can for my client. If I can get $50,000 more than someone else, I gotta go for it. So it's a terrible, terrible market. I don't like it, but that's the market that I'm in. Now, let's go. So today we're going to do something kind of different. We're going to do tweets, okay? And then I'm going to show you what those tweets kind of did for my research and where I went from there. Okay? That's the idea. This is kind of like where we did that special one last episode, which if you're on Rumble, it froze in the middle, which isn't cool. I don't know why that happened, but hopefully it works itself out. So here we go. We're gonna get started here. I'm gonna show you my screen. I'm gonna go here. We're gonna go here. I'm gonna go back here. I don't make this stuff I don't like it that way. I never have. Here. That's the way I like it. Okay, here we go. The first tweet is from Lance Lambert. And Lance is he's an editor at Fortune magazine. And his tweet says this. We're going to see a lot of Lance Lambert today because I don't want you to think, he's reporting what he sees. Okay. So he's actually going to have some places where he says the market's strong, some place where the market's weak. And that's what we're all seeing as agents. Okay. So here it is. New AEI Housing Center revises its housing outlook upward again. AEI's base case for U.S. home prices to rise 6% in 2023 and then another 7% in 2024. This is an upward change, accounting for continued tight supply combined with low unemployment. So what are we talking about there? So we've got tight supply. So in St. Louis, we do, when I look at the stats, we have lower inventory than we did even in 2021 and 2022. And we have what's causing higher prices. Now, low inventory in the sense that what's coming to the market. There is that argument about shadow inventory. There's the argument about people buying homes and converting them to rentals. So they're not really, they're not really available for the common home buyer. I think that's absolutely true. But then he goes to show that the base case was a 4% in 2023 and 6% earlier this month. And then in May, it was 0% in 2023 and 3% in 2024. In March, we project a cumulative U.S. home price decline from the June 2022 peak of -10 to 0 and -5 to +5 by year end 2023 and 2024, respectively. So, okay, so that's an expert, and that's where they're at. They said in the beginning of the year that it wasn't going to rise, and now it's it is rising. So what are we to make of this? Okay, Carl Quintanilla, the monthly mortgage payment for a new average loan size has doubled almost $3,000 since the beginning of last year. These higher mortgage payments will eventually begin to have a negative impact on the housing market and the consumer. This hasn't been true, though. I had assumed that once we hit 7%, last year? Has it been that long? That everything was going to freeze. I thought things were going to be so locked up that we weren't going to see anything. I don't know what to make of this. And I'm not ashamed to admit it. I just have no idea. You can certainly put in your stuff in the chat, put it in the comments. Give me something that tells me, look, some people say house prices, this is saying that house prices have to go down. The last tweet we read says house prices have to go up. We go on to Lawrence Summers. He was at Harvard and he worked for Obama and Clinton. And says, I was heartened to see CoreLogic's single family rent index continue its year-over-year decline. It's been the best predictor of shelter inflation in 12 months' time. Renters have borne the brunt of excessive fiscal stimulus, with prices up 26% since the start of the pandemic. Now, he's going to go on, but let me just put a couple things out there. Number one, there are thousands and thousands and thousands of multifamily units coming online. They're building them just left and right. So this has to lower the price at some point, asking price. Two, is it possible that some of these people are moving into houses and therefore causing the asking rents to go down? I don't know. It's hard for me to believe somebody is excited about moving into a house right now, given the terrible, environment. It says the decline in private rent growth ensures some relief is coming on shelter inflation, but I fear economists may once again be overly optimistic about its size and duration. Housing is not our inflation salvation. In previous work, we warned residential inflation was poised to rise rapidly, rendering then current inflation forecast implausibly low, given available private rent data and the by well-known lag in the government's inflation measures. While directionally correct relative to expectations, CPI residential inflation has remained higher for longer than we had initially predicted because of tight supply conditions. Those underlying conditions have barely improved today. That's absolutely, I agree with that. At least where I am. Like if you're in one of the places where they had the iBuyer craze, like if you're in Phoenix, you're probably not seeing the same kind of market that I'm in right now. If historical patterns hold up and the market tightness does not improve, private rent growth will remain around 4% into 2024. Personal income growth is still high on average, but for the most vulnerable households, this will be hard to stomach. That's absolutely right. It's some of the people that are making good money right now that are hurting. People that aren't making good money are getting hammered. Lags and base effects will ensure a downward drift in shelter inflation in the coming months, but our updated model suggests that barring a serious recession, official shelter inflation is likely to remain in the 3 to 4% range in 2023 and 2024. Given the large weight of housing in the consumption basket, these patterns imply that the growth rate of other items must fall substantially below 2% to get inflation back to target. Whether this can be accomplished without the economy tipping into a recession remains to be seen. So, I don't know. Even if rent goes down, even if shelter goes down, everything is higher and food and everything else and goes up, you're still in a bad spot. You're still in a bad spot. So, not good. Charlie Bolello, I'm going with Bolello, could be something else. U.S. existing home sales fell 20% over the last year, the 21st consecutive year-over-year decline. That's the longest down streak since 2007 and 2009. U.S. existing home sales fell 20% over the last year, the 21st consecutive year-over-year decline. That doesn't make any sense to me. I'm just putting it out there. I have no idea what he's talking about. It says 62% of mortgage holders have a rate below 4% and 92% have a rate below 6%. With current mortgage rates close to 7%, many existing homeowners are staying put, leading to a shortage of homes for sale. That's what I'm anticipating as well. Unusual Wales. Homebuyers now need $117,100 annual income to afford a median price home in the United States per MarketWatch. Homes for sale since 5 years ago, before the pandemic, has seen a nearly 40% drop. Now we're going to go over a Redfin article. It says this one fellow writes, the median household income in America is $70,784. The middle and lower class have gotten screwed over the last few years. No investments to capture price appreciation. Wages slightly increased. Cost of living skyrocketed. So here, like what I showed you, even in 2019, you were paying at or around what had been the highs of the market in the Great Recession in 2008, 2009. Well, 2006, 2007, and then it went into the toilet 2008, 2009. Okay. But then at 2019, things got crazy. They were getting kind of warm, but things have gone off the rails, both in terms of inflation, which is your purchasing power, and then you've got your regular home price appreciation. It's a very bad mess, okay? And I don't know how to fix it. Smarter people than I might be able to. Lance Lambert again. Objectively, the housing recession is in the new home space is over, says Allie with Income. New home sales are rising, housing starts are rising, and home prices are rising again. And so, the big question is that it? Are we back to growth mode from here? I'm not so sure it's a straight up line. There are still broader economic concerns that could impact housing demand, including potential turmoil following the Federal Reserve's restrictive policy, a significant pullback in consumer spending, or even the fallout from the commercial real estate sector. We're watching closely to see if there's a double dip recession in housing, or if demographic supported demand is enough to withstand wider issues. Now, look, depending on who you talk to, people say, well, there's like a collapse in the job market or the available wage earners. They're all dying off. That's an idea. When you're a real estate agent, okay, like 2018, 2019, I was seeing prices that I thought were a little high, especially in places like St. Charles, Missouri. So I had some buyers that were moving from Hazelwood out west. And so they said, hey, what do you think about building a new home? And we could go to the builder, okay, on a new home and say, here's what we would like. They would give us a set price, and it would be less than what we could get if we went and bought a used home. Now, to me, that's a no-brainer. In that situation, you buy the new home. It's cheaper, okay? It's newer. So you should have less things wrong with it over time, like the beginning. Now, you may have that 18-year where everything collapses, but who's staying in their house 18 years anymore anyway? So do you see what I'm saying? Like, we're seeing these stories where it's like housing market is stable, new housing market is doing just fine, it's no longer a recession. It's just like, what is really going on though? When I go to help a buyer buy a home, I'm still having to write an offer that I'm uncomfortable with. When I'm seeing houses listed every week, they're not coming to market like where they should be. They're asking $5,000 and $10,000 more than their asking price should be to start, which means that it's going to be even higher when somebody actually buys it. It's crazy. I don't know. Amy Nixon, fraud is the house of cards propping this housing market, not organic supply and demand. People who received fraudulent loans were significantly more likely to purchase a home during the program than those who got the money legitimately, driving up home prices. And so this in the Wall Street Journal says, fraudulent COVID aid drove up U.S. house prices, report says. Researchers found that people who defrauded the government for pandemic relief poured money into housing markets, driving inflation in some areas. Now, I don't think, how do I put it? I don't think that the stuff that was going on was right. I mean, even if it didn't lead to house price increases, it certainly led to inflation. So this is, I mean, there's something to this. There's also something to getting a loan on Airbnb where you show the income of the property and not the value of the home, or value the home as that and not as a regular single family home. Lance Lambert, here we go. It says, Pantheon chief economist Ian Shepherdson, we are baffled by the emerging narrative in the commentariat. The housing is now recovering because it isn't. The bulk drop in U.S. home prices is yet to come. The lagged effect of the plunge in sales points to a steep drop. The U.S. housing market is not in the early stages of recovery. The downturn is merely morphing from a collapse in demand, sales, and construction to falling prices and housing-related consumption spending. That's interesting. So that would mean, like, I've got this house and I need something for the backyard. I need to buy some plants for the backyard, but I don't buy the plants for the backyard because I don't have enough money because I'm busy paying for the house. I don't know. I cannot imagine house prices are going to keep up like this. I think it's going to be bad, but I don't know when it is. And I would still tell my buyers to buy a home. I mean, if they need to buy, people need, it's a very odd argument. Let's just put it this way. So say there's a couple and they're expecting a child and they have a small home. They want to move to a larger home. Okay. They don't have to move. They don't have to, but it would be good in their life if they did. Now, I mean, I don't like this whole we had to move thing. I just, yeah. Lance Lambert, Bank of America, low inventory in the existing homes market has acted as a floor for prices, keeping prices elevated relative to pre-pandemic levels. Despite the decline in sales, Bank of America insinuates that national home prices have already bottomed. Well, there you go. They say that there's a floor. The guy just a minute ago says that it's going to collapse. The guy on the other page said that we're going to have new home sales aren't going any further down. I mean, and I don't feel like I'm too ideological to just stay in one kind of silo. I really don't think anybody knows what's going on, and especially based on my original example. I mean, the house prices are crazy. Lizanne Saunders, home price growth continues to deteriorate as of May. Year-over-year percentage change in median price of existing single-family homes slipped to negative 3.4%, which is the worst since December of 2011. So, like, another thing I get a little bit confused by is home price growth, appreciation, or in this case, deterioration. I mean, I just feel like it's a bit subjective. For instance, if I list a home and the people have maintained the home, it looks good, has great curb appeal, I can get more money for that house than another house where they didn't do any of that work right this minute. So in one, the house price appreciates, the other one, the house price doesn't appreciate because they're not, if you're talking like millions of data points, okay, or hundreds of thousands of data points in the United States, you're going to get skewed numbers. And I think that this is a situation where when you're looking at the numbers, it doesn't make any sense. Like if the median price of an existing single family home slipped, okay, to negative 3.4%, it doesn't mean I can go out to like University City and even come close to getting what I need for a house. I mean, it's problematic. So that's going to be the end of the Twitter that was just kind of random stuff that is saying the market is great, the market is not great. Now I want to hone in on something a little more closely. So this is the first one. This is the first report I saw. It says the number of homes for sale in the U.S. fell to record low levels in May as high mortgage rates continue to deter people from moving. Active listings fell 7.1% on a seasonally adjusted basis in May and were down 38.6% from pre-pandemic levels. So that's from Redfin data. It's what I'm seeing in the market as well. It's like there's not a whole lot out there to buy. If you're selling your home, it's because you got divorced. You're selling your home because you got it as a gift, like someone died and you were the beneficiary. And that's about it. Now, it's strange because if people are moving to a different home, the question becomes, if you're a buyer, why are you paying stupid amounts of money extra and 7% on an interest rate to move? Like, why don't you just stay in your house? And then those people that do make the move, they're like, okay, well, we spent way too much when we bought this house. When we list our house, we're going to ask for a ridiculous amount of money. And so that's what they do. It's like, it's very, very strange. It's like no one wants to be caught holding the bag. And yet some people will be. Daniel DiMartino Booth, existing home sales takeaway. The number of homes for sale fell 6.1% year over year to 1.08 million units, the lowest in data to 1999. The 2008 great debate inside the Fed was whether MBS mortgage-backed security quantitative easing, could mortally wound mobility to the economy's long-term detriment. I believe the debate is settled. Huge policy error. I don't know. I mean, I agree. Basically, it was kicking the can down the road. That's what we got. Let me check the chat. There's no one in the chat. The manipulation of asset classes by the federal government is concerning, and given that they can't seem to manage like our security, I would say, our national security, they're not very good at that. if you look at what's going on in the world. So I don't know that the Fed itself is very good at managing inflation or assets. Well, they're good at managing assets. They create bigger bubbles than what may have been caused if they wouldn't mess with things. Wolf Richter, home prices dropped year over year by most since 2011 as investors pull back amid dismal sales and rising supply. June will be the final leg of the spring selling season. Then things skid downhill till early 2021. So, like, just to give you an idea of what my usual, how would I put it? How my usual sales cycle goes. Normally, from April to July, I'm slammed. Then things slow down, and I'm not nearly as busy until again March. That's in St. Louis. Now, other places, I mean, we're kind of. I feel like it's always been dictated by the schools. Like when people want to move, they don't want their kid to be like starting new school in the beginning of the year, so they wait until the kids are out of school. I've always thought that is the reason, but it never made. I mean, I also kind of thought it was the weather. Nobody wants to move in freezing cold January, but I don't know that that's. I just know that this is how it goes in St. Louis. And in fact, if you go on Google and you look at just the term homes for sale, you'll see that it peaks in April every year. It's crazy. So I saw these 3 articles, okay? And then I was like, well, is there more to it? So there's the Redfin article. We're going to get to that second. We're going to go to this ZeroHedge article. This was out of Bloomberg. It says, existing home sales unexpectedly rose in May as prices tumbled most since 2011. Prices in St. Louis have not tumbled. Prices in St. Louis are actually going up. Inventory is still going down, okay? Days on market is going higher. Average days on market, which should mean that things should slow down. Anyway, existing home sales unexpectedly rose in May with a small upward revision for April's tumble. That is only the second positive month for existing home sales since January of 2022. Total sales are basically flat, refusing to allow new home sales higher for now. Sales advanced in 2 of 4 regions, led by the West and the South. Relatively steady rates have led to several consecutive months of consistent home sales. However, existing home sales activity is down sizably due to the current supply being roughly half the level of 2019. The median selling price declined 3.1% from a year earlier, the most since 2011, to $396,100. That's still historically elevated for the month and reflective of limited supply. The number of homes for sale fell 6.1% from a year earlier to 1.08 million units. That's the lowest inventory level for any May in data back to 1999. That's where I'm at. It's not good. Just being honest. So let's look at this Redfin article that's caused all this discussion. It says there were fewer homes for sale in May than any other month on record. The pool of homes for sale is shrinking because homeowners feel trapped by rising mortgage rates, with new listings down 25% to the 3rd lowest level on record. A shortage of homes for sale is fueling bidding wars in some areas despite sluggish homeowner demand. 37% of homes that sold in May went for more than their listing price, a higher share than usual for this time of year. Absolutely. But not even, it's been this way now for a couple of years. Homebuyer competition is propping up prices, which were down just 3% in May from the record high it hit a year earlier. The number of homes for sale in the U.S. fell 7.1% year over year to 1.4 million on a seasonally adjusted basis in May. That's the lowest level in Redfin's records, which date back to 2012 and the first annual decline since April 2022. Now remember that those other statistics were based on 2009, not 2012. By comparison, there were 2.2 million homes for sale in May of 2019 before the pandemic rocked the U.S. housing market, meaning housing supply was 38.6% below pre-pandemic levels this May. Now, look, in St. Louis, Missouri, in 2019, I still had to make a pretty decent offer to get a house. I mean, like the good houses that are priced right always sell. It's the ones that are really like questionable that tend to not do well. But that's true in any market. Americans' housing stock is dwindling because there are very few people selling homes. New listings of homes for sale declined 25% year over year in May to the third lowest level on record. And on a seasonally adjusted basis, as homeowners were handcuffed by high mortgage rates. I think that's true. Again, double what you would have paid earlier. Nearly every homeowner with a mortgage has an interest rate below 6%, meaning many are opting to stay put because selling and buying a new home would mean taking on a higher monthly mortgage payment. The average 30-year fixed mortgage rate in May was 6.43%, up from 5.23% a year earlier, and a record low of 2.65% in 2021. Housing supply had already been lacking for years due to a steep drop-off in home building. Following the 2008 financial crisis, the shortage intensified in 2021 because rock-bottom mortgage rates prompted scores of people to buy homes. That's true. That's true. I mean, like you say, well, should you have gone and bought a home then? I'll be honest with you, the competition was fierce. I mean, you may have wanted to buy and refinance. Like, that would have been the move. It says the intensifying housing shortage is propping up home prices. The pool of homes for sale shrinks. Home buyers in many markets are grappling with competition, which is preventing home prices from plunging despite a cool down in buyer demand brought on by elevated mortgage rates. The median U.S. home sale price was $419,000 in May. That's down just 3.1% when prices hit a record high of $432,000. While home prices fell in May, they posted a smaller decline than they did in April when prices dropped 4.2% from a year earlier, the largest decrease on record, with the exception of January 2012. I mean, here's the median sales price. This was ridiculous. This is not so good. But, I mean, like, if a normal person would like just like a straight line. A slight angle up would be fine too. Redfin, a typical home that sells is no longer selling at a discount. When was it ever selling at a discount? The average sale to list price ratio, which measures how close homes are selling to their final asking price, was 100%. In May, meaning the typical home that sold was purchased at its list price. That's down from 103% a year earlier, but it's the highest level of May of any on record prior to the pandemic and follows 9 straight months of sub 100% sale to list price ratios. Again, this is a national survey. And I'm telling you, in St. Louis, we have been over 100% for most of like the last 3 years. Now, I'm not saying St. Louis is great or anything like that. We might be the anomaly. All I know is if I write an offer at 92% of asking, I'm probably not getting the house in the first weekend. Okay. I'm probably not. It says it's too early to say that declines have bottomed out, which we saw in 3 tweets earlier. Prices may have room to fall because mortgage rates could still rise. The Federal Reserve just signaled that it's likely to continue raising interest rates this year. That could further hamper homebuyer demand and cause the home prices to fall in the near term. Though the drops would be minimal, we're unlikely to see double-digit price declines like we did during the 2008 housing crisis. That's their words. Fairweather considered, many people think it's a bad time to buy a home right now because mortgage rates are high, but they should keep in mind that when rates do ultimately fall, many buyers waiting on the sidelines could jump back in. That's exactly right. That could lead to more bidding wars since there aren't enough homes for sale, and heightened competition could push up prices, offsetting some or all the benefit of lower interest rates. Well, that's not really the way I would look at it. I mean, you buy a house, okay, and you've got this payment, and say you're at 6%. Your ideal scenario would be the value of the home goes up, and you're planning on staying there forever, and then you refinance down. The worst scenario is you buy a house with a high interest rate at a very high price, and then that price goes down. The equity, you actually lose equity in the home, and then you try to refinance. You have to actually bring money to the table. That would be an absolute disaster, and you wouldn't do that. So yeah, it's a bad situation. The housing shortage is fueling homebuyer competition in many markets. While demand from homebuyers has fallen, new listings have fallen even further, meaning many of the buyers who are out in there are counting bidding wars. Now, that's what I'm saying. Even though the typical home that sold in May was purchased for its list price, more than 1/3 went for more than their list prices, a sign that some buyers are facing competition. No, they're not some buyers. That's down from 59% a year earlier, but it's the highest share of any May on record prior to the pandemic. It was ridiculous. I can't believe that it was only 60% of homes sold above asking. I mean, I had a house that we've been tracking that we put an offer in. They were asking $525. We put in an offer for $530. It sold for $570,000. Blew me out of the water. But understand, I can't tell my buyers to put down more money if they're not comfortable doing so. I told them that I thought it was going to go for a lot more. They didn't feel comfortable with that, and I don't blame them. Whatever they feel comfortable putting in an offer, we'll put in that offer. Speed is another good way to gauge competition. The typical home that sold in May went under contract in 31 days, which is crazy. That's hard to believe. If you go into St. Louis and you got a weekend, okay, your offers are due, that Sunday or Monday, and there's probably like 6 offers minimum, and it goes under contract in 4 days. So if I see a house right now that's on the market for 14 days, I mean, that is like they really missed on the price. That's crazy. Nearly half of homes offers written by Redfin agents faced a bidding war in May on a seasonally adjusted basis. While that's down from 56.1% a year earlier and a peak of 69% in January of 2022, it's notable that so many buyers are facing competition at a time when demand is sluggish. An offer is considered part of a bidding war if a Redfin agent reported that it faced at least one competing bid. Where in this article is it saying that demand is sluggish? It's not sluggish. There's people trying to buy homes and they're willing to pay more than asking. Demand is not sluggish. There's a huge lack of housing inventory in Miami, and that's combined with higher interest rates is making home buyers' lives very challenging. Their money just isn't going as far, said local Redfin premier real estate agent Rafael Corrales. I'm encouraging my buyers to be a little more flexible. In some cases, I'm suggesting we go back to 2021 winning strategies, which can mean waiving contingent and offering high earnest money deposits because they're competing against a lot of cash buyers. That's not so much here. We're not competing against a lot of cash buyers here. 1/3 of U.S. home purchases were made in cash in April, the latest month for which data is available. That's up from 30.7% a year earlier, and comparable with February's 33.5% share, which was the highest in 9 years. Cash purchases are becoming more common because elevated mortgage rates are deterring many house hunters who would need to take out mortgages, leaving cash buyers to take up a larger piece of the home buying pie. And I would just say this: I disagree with that entire thing. What I would say is when the institutions were buying homes last year, they were buying them in cash. Okay, why didn't those show up in the data? Home sales are falling, but not as quickly as they were at the start of the year. Now we've been seeing that in different articles. They say that the home prices are maintaining their levels. This is the bottom. We're seeing all these things, and yet it says home sales are falling, but not as quickly. It says closed home sales fell 19% year over year on a seasonally adjusted basis in May, the smallest drop in nearly a year, an improvement from the record 35.3 decline in January. Still, sales were significantly below pre-pandemic levels, down 21% from May of 2019. Pending home sales performed similarly. They fell 21.4% year over year on a seasonally adjusted basis in May, the smallest drop since last summer, an improvement from the record 36.1 decline in November. Pending sales were down 16.1% from May 2019 levels. I mean, if you're looking at a house, let me do this. Look, if you're looking for a home right now, you know that the situation is odd. And if you're trying to sell your home right now, you're hopefully you find one of these desperate buyers that's going to pay for your things, your house at that price that you want. And that's all there is to it. I don't know. What do you think of the show today? It's a Friday afternoon, and I put one out, and I feel pretty comfortable about it. I feel pretty happy. Got itchy eyes. Allergies here in St. Louis are going a little crazy for me. Gonna go for a walk tonight. Gonna show some houses this weekend if I don't yawn. What are you doing? Put it in the comment section. I'm gonna head out. Thank you for watching. It was good to see that Rumble made itself back. And I will see you, who knows when, hopefully soon.